Are the new interest rate hikes in Canada really killing the Toronto and GTA housing market? Well, in this video, we're going to explore a Bloomberg article that says exactly that. They're saying that the interest rate hikes are responsible for the 2 months in a row that we've had price drops. And make sure you stay until the end, because we're going to also look at a TREB report that'll show you exactly the average price points by month for January 2022 to April 2022. And we're also going to look at historical numbers from 2021 all the way back to 2010. So let's get to it. Hi everybody, my name is Connie Sarvananthan and I'm a real estate agent and investor here in Toronto and the GTA. And I think we should just get straight to the Bloomberg article. I'll make sure that I link to it in the comments below as well. Okay, so this is the Bloomberg article and I will make sure I link to this article down below. So Toronto home prices dropped most in 2 years as rates slammed the market. So what Bloomberg is saying is sales fell sharply with mortgage rate at the highest since 2020, and housing price growth is unsustainable, according to the Bank of Canada. And so what they are saying here is Toronto home prices declined for the second straight month as higher borrowing costs start to bite into what has been one of the world's hottest housing markets, which we all know. The average price of a home in Canada's largest city declined 6.4% in April from the month before on a seasonally adjusted basis to 1.2 million, which is about $936 US, because Bloomberg often has US readers, according to the Toronto Regional Real Estate Board. So we call that TREB. And it is the biggest drop since April 2020, which was when the market was largely frozen because of COVID-19 lockdowns. So in summary, basically, April had the largest price decline since April 2020. And in April 2020, that's when we kind of went into the COVID lockdown. So everything kind of froze at that point. So according to Bloomberg, buyers slammed on the brakes last month. The number of houses sold in Toronto declined by 26% in April compared with March, according to the board's seasonally adjusted data. And Vancouver homes also dropped sharply. So the declines are happening as the Bank of Canada embarks on what's expected to be one of the most aggressive campaigns to raise borrowing costs in the institution's history. Since the beginning of March, the central bank has lifted the benchmark interest rate from 0.25 to 1%, and markets expect to rise to at least 1.5% on June 1st. So remember, for the last 2 years, we have been living with interest rates at basically 0.25%. And then at the beginning of this year, they raised it from 0.25%. Sorry, and when I say we have been living with that, that's the Bank of Canada's overnight rate. From there, you get, the consumer rates from there. So it was 0.25 for most of the last 2 years. Then at the beginning of the year, they went from 0.25 to 0.5. And then just recently, they increased it from 0.5 to 1%. And now what they're saying is when they do the June rate increase, it's going to go from 1% to 1.5%. So, and this is all being done with a lot of intention because the Bank of Canada realizes that housing is out of control, and they also realize inflation is out of control. And so they're trying to introduce these measures to try and calm the market down. So according to this, they're saying buyers have hit the brakes. Toronto home prices dropped for the second straight month. This is the chart. So what you'll see is even in April 2021, there was a decline, but the real decline is April 2022, where it was dropped by 6%. Canada's 50% rise in home prices in the past 2 years was driven in part by emergency low rates that helped the economy through the COVID crisis. The rate reversal has left the nation's housing market, and particularly places that saw massive gains, such as Toronto, looking increasingly vulnerable. So basically what they're saying is Overall, Canada's home prices raised by 50% over the last 2 years. And part of the reason why that is because we had these historically low interest rates. Remember, 0.25% for almost the last 2 years was the overnight rate. And so now that they are raising the interest rates, Bloomberg is saying that this is making the markets that really appreciate it a lot more vulnerable. They're saying Toronto, but quite honestly, there was a lot of GTA markets that grew significantly more than Toronto. Housing price growth is unsustainable. It's unsustainably strong in Canada, says Rogers from the Bank of Canada. It would not be a bad thing for the economy for the growth in housing to moderate a bit. We do expect that to happen as rates go up. So what they're saying is, as these rates go up, the moderation should start happening. And definitely, I'm seeing it in the marketplace. There's less showings, there's less offers, and there's a lot of buyer hesitation out there because they don't know what's going on with the market. That said, I've said this before and I'll say it again. When there's a great property at a great location, it's still going for multiples. But if you have a house that has any issues with it, it is no longer going in multiples. It's no longer going for crazy pricing. Buyers are actually hesitant and thinking about it a lot more. Like I mentioned before, and I have a video on this, we purchased a property just a couple of weeks ago, and it was us looking for an opportunity in the marketplace. Well, there was this hesitation and people did not want properties that had issues. We bought a property that had issues that we're really happy with because a sister property on the same street, similar, sold for significantly more because it was ready to go. So I definitely think there are bargains to be had, but there is a lot of buyers just waiting and seeing and watching what's happening. Nobody has a crystal ball, but definitely there has been buyer sentiment that says, whoa, I just want to wait and see what happens. So if you look at the Toronto home sales, they're saying that as interest rates rose, home sales went down. So this is just overall home sales. But what you'll see is where we are right now, even though total number of home sales went down, it's comparable to, other time frames in April, 2019, 2017, where it also went down. But for sure, it's going down from where we were in January and February, the number of home sales that were happening. So what does all of this mean? Well, so even with Bloomberg's overall title, they're saying, despite the recent slowdown in activity, Toronto's housing market remains historically tight. At the end of April, there were only 13,098 properties left for sale in the city, and it took just 11 days on average for a listing to sell, which is what the real estate board is saying. But both numbers were up from March in a sign that buyers are finally seeing a little bit more choice and some increased bargaining power. So even though we're in a market that is still tight on inventory, we're seeing more properties for sale. We're seeing buyers are finally not feeling the pressure that they felt in January and February. So for sure, there's buyers can be a little bit more picky now. They may be able to put in conditions. They may be able to do a lot more things than they haven't been able to do for the last 2 years. And even though we're still in tight inventory, it is now much better for buyers overall. Based on trends observed in the April housing market, it certainly appears that the Bank of Canada is achieving its goal of slowing consumer spending as it fights high inflation. The Toronto Real Estate Board's president said, negotiated mortgage rates rose sharply over the past 4 weeks, prompting some buyers to delay their purchase. And I know that is true even from my own personal buyers. Several of my buyers are like, they want to wait and see what's happening before they make a purchase. Everybody's a little bit afraid of overpaying right now. And then I have other buyers who are like me that are like, I'm not going to do something silly, but I'm also going to look for opportunities in the marketplace. And then finally, however, with the mortgage rates now at their highest in about 2 years and home prices still far above last year's level, some of April's drops in sales may have simply been due to people being priced out of the market. So what that line is saying is that, the mortgage rates are higher than ever, but there was still, the home prices are still super high, even compared to last year. And I'm going to show you a chart at the end of this that'll explain that. And it'll show you the average price by month for all of 2021, 22 year to date, and then historical averages by year. And you'll see exactly what's happening. If you're finding value in this video, please like and subscribe. It really helps us out. And if you have any questions about real estate, feel free to call, text, email, or WhatsApp, and we'll be sure to help you out. Or just make an appointment. I love talking real estate, and I'm happy to answer any questions. So with that, a separate report from Canada's National Housing Agency said that Toronto's home building efforts are still badly lagging behind its population growth, so it may be some time before we see truly a balance between supply and demand. So this is just saying, even though the situation is improving for buyers, it's still not a balanced market, and we still have a ways to go before we get to that balanced market. Buyers who have moved to the sidelines will not remain there forever, and the population of our region will continue to grow on the back of immigration. And in the absence of new supply, we will build a significant amount of pent-up demand that will need to be satisfied in the not too near future. So they're saying that, this might be a slowdown, but until we address the supply issue, this slowdown may not be long lasting. Whether that is true or not is still debatable. Nobody knows for sure, but we are definitely looking at different options to see what will make a difference or not. So that's the Bloomberg article. Now let's take a look at the historical numbers to show you exactly what this means from a market standpoint. So this is the TREB report. This is the Toronto Real Estate Board's statistics. And so this is historical annual statistics. So this is prices from 2010 to 2020 and the average price point. So what you'll see is in 2010, the average price under the Toronto Real Estate Board was $431,000. And by 2020, so 10 years later, it was more than double. Right? So that's the first thing you want to take a look at. Now, if you look into 2021 monthly stats, this is the average price point by month. So what you'll see is, in January, we started at $966,000, and by December, we were at $1,157,000. Now, here's where it gets really interesting, and this is where it's important to see, even though we've had 2 price drops, the price drops still haven't taken us back to our December 2021 pricing. So in January 2022, the average price went from $1157,896, so $1,157,896 in December. In January, it jumped to $1,242,325,000. And then in February, it jumped again to $1,334,000. And then in March, it dropped slightly to $1.3 million. And now in April, it's at $1.254. So $1,254,436. So if you take that $1,254,000 and you compare it to when was the last time we seen this pricing? Well, this pricing is still significantly higher than our December number. It's almost 100,000 higher than our December number, which was 1,157,000. It's basically in line with January's numbers. So January was 1,242,000, and April is 1,254,000. So yes, for sure, we are seeing a decline from our February and March numbers, but we're just back to January. We are not even back to 2021 yet. And that might happen in the future. It may not. But even though the prices are dropping, I think the prices are also reflecting the fact that the January, February, and March numbers of this year were so excessive. And I think that's what the report was saying too, that, the numbers went up so quickly, so fast that you couldn't sustain that. So what the Bank of Canada is doing is introducing these rate hikes, and they are slowing down the market, and it is happening, which is great. But it's happening that it's just not continuing to rise that crazy amount that happened in the first quarter of Q1, and it's mitigating it going up from there. And remember, if you were in the market in this time frame, you may have been priced out, which is also what the article said. So the slowdown in buyers may have been that you were priced out of some properties, and now with the numbers coming back down, you'll see more buyers being able to afford if the prices are coming down as well. Thanks for watching. If this is your first time to the channel, please like and subscribe. It really helps us out, and it also lets us know what kind of videos we should be putting out so that we answer any questions that you have. And if you have any real estate questions, feel free to call, text, email, or WhatsApp, or even better, make an appointment with us. The link is below. I love talking real estate, and I'm happy to answer any questions. Thanks for watching. My name is Connie Sarvananthan.